Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me is Shrishti Sharma. This is a show where we take you through all the stocks that are buzzing away in trade, either on the back of technicals or on the back of research and news flow. Shrishti, but first up, a major news flash also coming in, and also let's take stock of how the markets are faring. Not a great day, not a very exciting day for the markets coming in there. In fact, we've just managed to inch up from Nifty's lowest trading point by 0.3%, so hardly an uptick there. But largely, not a very exciting day for the markets.
Well, yes, we are in the red territory, but definitely a good news amidst this market as well, wherein the S&P has upped the outlook on Indian economy, where they have upped their rating. As per the rating is actually standing to be the same at BBB negative, but they have revised the outlook to a positive from a stable rating earlier. So that's indeed a bit of a silver lining amidst the market volatility, because for today we are seen to be once again drifting lower, and after the first tick as well we are seen to be trending downwards, because for now Nifty is down about 104 points, as well as for Bank Nifty 515 points of cut is what we are witnessing, though the markets are trying to recover slightly from the day's lowest point, but not much of a substantial recovery out there. But Hindalco is one such stock from the metal space that is seen to be shining bright. After the announcement related to Novelis listing, we did see a soft start to this particular counter, but over the day the stock is seen to be building its momentum, 4% gain on this counter. And as we have been highlighting, all these pharma majors from the likes of Sun Pharma, Cipla, the defensives are once again seen to be coming back in flavor. Other than that, in the last 1.5 hours, the Adani group of counters from the likes of Adani Ports as well as Adani Enterprise, they are seen to be trending upwards. But on the flip side, SBI Life is down about 2.5%. Even this is followed by the fall of HDFC Life, which is seeing a cut of over 2% now. And some of these private banking names from the likes of HDFC Bank, Axis Bank, ICICI Bank, they are seen to be putting pressure on the banking index for today. But what we are seeing is that the breadth of the market has actually improved a little bit from the first half of the trading session, because as of now there are over 1100 stocks in NSE that are seeing some gains versus 1241 stocks that are seen to be declining in today's trading session. So that's how the markets are up to. They are actually trying to recover slightly from the day's lowest point, but let's see, Ankita, that how this actually pans out to be.
Absolutely, Shrishti. But for now, we have we're in the thick of earnings season, and we are joined by an earnings candidate on our show today. Suresh Kalpathi is the executive director and chairman of Veranda Learning, who's joining us after the quarter 4 results. Hi, sir. Welcome to ET Now Fatafat. Sir, your company has turned EBITDA profitable for the first time in FY24. Give us a sense of the profitability going ahead.
Thank you. Thank you for the call. FY24, as you mentioned, has been our first year of positive operating margins. Compared to last year, our revenues went up from 160 odd crores to about 360 crores. So we more than doubled our top line, but more importantly, from a deeply negative operating margins, our adjusted EBITDA for FY24 is 65 crores of positive EBITDA. So for us, this was something significant that we have been projecting, but it is great to have been able to achieve and report the same numbers to the market. Going forward into FY25, we expect to keep up the momentum of our top line growth. So we expect to go to around 600 crores of top line for FY25. And we expect our operating margins to at least double going into the next year. So our EBITDA margins are expected to tick up from the mid-teens to the lower 20s, going from FY24 to 25. And all of this is coming from businesses that are now already part of Veranda. So this is just pure organic growth that is going to come from FY24 to 25. And we expect our operating margins to continue to tick up higher.
Good afternoon, Suresh. This is Shrishti also joining in. For FY25, what we understood is that your guidance was around 550 crores, but are you like taking it up to 600 crores? Is the first clarity I wanted to have from you. And also, Suresh, since you're sounding positive on the growth outlook for FY25, help us understand that how you're planning some of the new acquisitions in the upcoming year, as well as what will be your expansion plans?
Yes, we expect to touch about 600 crores of our revenues. And this is purely coming from organic growth of assets that are already part of the Veranda ecosystem. We have been trying to stitch this platform together. So today, there are far fewer parts of the business of the education ecosystem that's not part of Veranda at this stage. There are a few. There are conversations ongoing. I think a couple of things that would happen is there will be few acquisitions that we will do going forward into the future because most of them are already stitched into the Veranda fabric. We also expect to be able to do acquisitions that are both meaningful and accretive to the Veranda system. So you will see if we should do some of them, it would be much larger than some of what we have done in the past. And they will be far fewer than the numbers that we have done again in the last 2 years. Again, the numbers that we are projecting are based on businesses that are already part of Veranda. So the FY25 will probably be the first year of pure organic growth in the business that we are projecting to.
Right. Right, Mr. Kalpathi, speaking of, the revenue guidance that you just gave, the recent order win from Karnataka government, what's the estimated revenue potential from there? And, will there be more B2G orders coming in for upskilling?
Yes. I think over the last 4-5 years, we are seeing that the skill development corporations for most of the state governments have made their operations very professional. It's truly now a bridge between the people coming from colleges to what the industry and the professional environment needs. And that's also part of our interest to start engaging with the governments. We do quite a large business with the Tamil Nadu skill development. With the Karnataka skill development, again, we are opening up on multiple fronts. So this business is for Edureka, which is our software upskilling business. We'll also be doing business from the forum of JK Shah classes in commerce coaching, and we'll bring many of our other businesses to contribute. So currently we're establishing channels. We expect to open up with another 3 or 4 state governments during this year. And the B2G is expected to be a very significant part of our top line and profitability.
Lastly, Suresh, if you can help us understand the enrollment trends for the B2C customers, like how are the demand trends? You did talk about that this is going to be a significant revenue opportunity, but looking at the client confidence, how are you planning to take the overall portion or the overall contribution of your B2C customers in FY25?
The number of people that we enrolled and trained in FY24 was closer to 700,000 students. So that number is growing. FY25, we should cross a million student mark during FY25. Majority of our businesses have so far been B2C. Though we have a few B2B customers, majority has been B2C. FY25 will start us doing businesses which are B2B on one side with governments and on the other side with schools and colleges institutions. So we expect to start growing those numbers too, which are expected to contribute for some of the numbers that we are projecting. But so far, largely, the entire ecosystem of Veranda has been predominantly B2C.
All right. Thank you so much for joining us, Mr. Suresh Kalpathi. Thank you so much for joining us. With that, we'll have to let you go on that note. But it is time for us to slip into a short break. Don't go anywhere. We'll be right back.
welcome back to Market Fatafat, and let's keep it going with all the buzzing counters in trade right now. And with this, let me welcome on board our technical expert for today, that is Amar Singh, who is joining us from Angel One, as well as Jinay is joining us on the research side. So let's get it started, viewers, highlighting all the buzzing counters. And Amar, let's come to you first and talk about Jubilant Food. This has been one of the laggards in the whole QSR space, but in the past 3 days we are seeing good momentum in Jubilant Foods. How are you seeing the stock right now, and where's the stock headed on the technical front now?
If you look at Jubilant Foods, we are seeing some very positive momentum happening in this particular counter. And also, if I look at the stock has breached crucial zone of resistance, because earlier the stock was unable to breach the 480 levels, 500 levels. The stock has broken that level, and on a weekly basis the stock is up by almost 10 to 11%, and we are seeing a consolidation happening also. So the stock has taken support, and there is a potential that the stock could rally above, once the stock sustains above the 535, 540 mark, because that's going to be a zone of resistance for the stock. If that is taken out, then we could see the stock headed towards the 580, 600 levels, because what we are seeing on the monthly charts is that a bottom definitely has been formed for the stock, and on the intermediate term trend we are seeing a build up happening, and on the short term trend we've seen some increased volume and delivery quantity over the last 5 to 6 trading sessions. So that tells me that the worst seems to be over for the stock, and the stock could sharply move upwards. So the levels to watch out on the upside is, I would say, around 590, 600. That's a level to watch out for once it reaches the 540 level. So the short-term trend is positive for the stock. So this is one stock one can keep a close watch on.
Alright, moving on to the other stock that is in focus today, and that is Grasim. Now, Birla Group Holding Private Limited, which is a promoter of Grasim Industries, has raised its stake by 4.09% in the company according to an exchange filing. Now, the Birla Group Holding company is the company that has gone up. The stake for the company has gone up to 23.18% now from 19.10%, and this is at the end of the March quarter. Now, the additional 4.09% stake buying by the Birla Group has happened under a scheme of amalgamation. Well, about 2.67 crore fully paid up equity shares of the face value of ₹2 apiece, or 3.9% stake, and 10,63,000 equity shares of 0.50 partly paid up share of Grasim Industries held by Umang Commercial Company Private Limited were transferred to the Birla Group on 24th of May. That's what the company said in an exchange filing. So they have raised the stake in Grasim. And the back of that, Grasim is likely to be in focus today. Currently, it is trading absolutely flat with cuts of 0.05%.
All right, then moving on to the next query, and moving on to the next stock in focus, and that is Suzlon. Actually, the stock was gaining in trade today on the back of the news flow. Firstly, Suzlon secures a new order of 3 megawatt series from Aditya Birla Group. So this is indeed positive. But other than that, we have also seen a lot of these brokerages coming out with a note. Just a couple of days back, Anand Rathi came out with a note, but today Nuvama has come out, has actually initiated coverage on this particular counter with a buy rating and a target price at 53 rupees. What they're saying is that there is a strong industry tailwind, a powerful growth enablers benefit of restructured balance sheet. The company is capable of sustaining its lead in the WTG trunky EPC execution, and they also expect the order book as well as profit to grow by 21% as well as 61% on a year-on-year basis between FY24 and 27. So definitely a lot of positive comments from Nuvama in their report, and the stock is also shining bright today, holding on to the gains of almost 5% on the back of these two positive news flows.
All right, Jinay, coming to you, Prestige Estate is what you picked out for us. This one's an earnings candidate, and currently the stock is trading with cuts of more than 2%. Tell us, what does the report card look like?
Well, yes, the company reported a good set of mixed set of numbers actually. The revenue saw a downtick of around 24%, coming in at 2,232 crores versus 2,935 crores last year. And the PAT, which is net profit, also saw a downtick of around 53% this quarter, stood at 236 crores versus 504 crores on Y-on-Y basis. Now, talking about operational performance, the sales were up around 21%, coming in at 4,707 crores. The collection also saw a good uptake of around 26%, which stood at 3,474 crores. If we talk about the area sold, it stood at 4.11 million square feet versus 4 million square feet, which was a slight improvement of about 3%. And the average realization per square feet was also up around 17.5% this quarter. The management was earlier on ET Now, and they said that Q1 FY 2025 will be a slightly sluggish as there is a delay in approval of launches. They currently have an inventory about 60,000 crores for FY 2025, and moving ahead, Bangalore will be the growth leader for the company.
Alright then, moving on, and Amar, let's talk about Titagarh Rail. This is the stock that you are picking up on the technical front. Tell us how the chart's looking like for this one.
This is one stock which again has been performing exceedingly well, and if you look at the stock for the year is up by almost 30%, and a majority move has happened this month itself, post the consolidation which the stock had witnessed and the stock correcting almost towards the 800 mark, and now it's back to 1350 level. So what we are seeing here is that the long-term trend definitely continues to be very strong and positive for the stock. Intermediate term trend, we did see some consolidation, but that also continues to be strong and positive. And the short term trend, what we see is that post the consolidation, the volumes have increased significantly. So that is again a sign of interest in this particular stock, and sustaining over the 1300 levels, the stock is actually trading in uncharted territory. But having said that, those who are long, they should look at holding on to their positions with a stop loss below the recent close of 1240 or so. On the upside, the stock has a potential to rally towards the 1450, 1470 levels. So one can keep a close watch on this stock.
The other stock in focus and an earnings candidate is Amara Raja Batteries. Now, Amara Raja had reported a profit after tax of 142 crores in the January to March quarter, and the revenue from operations also rose to 2,908 crores for the fourth quarter as against 2,433 crores on a year-on-year basis. Jaydev Gala, who's the chairman and managing director, also came out with a note. He said that their business across segments has performed considerably well, and they have a wide array of products and solutions that cater to every type of automotive and industrial applications. The company board also approved a dividend of 5.10 rupees per share, and that's the numbers coming in for Amara Raja, and we can see the impact on the stock price as well. The stock is trading with cuts of almost 2.5%.
Alright, moving on then, let's talk about another stock that is in focus, and Amara Raja is definitely was down in trade today, but after the earnings, one stock that is seeing no stopping, Amar, that is certainly Divi's Lab. Though the earnings were quite great, the management commentary was also on the positive side, but on the technical front, where do you see the next stock for Divi's Lab?
So if we look at Divi's Laboratories, what we are seeing here is that the stock overall the trend is definitely positive on the long term, on the intermediate term trend. Short term, we did witness some consolidation in the stock, and the stock was unable to consistently sustain over the 4,000 levels. That it correct to 3,800 levels as well. But post that, we've seen the stock taking off and the stock reaching the 4,000 levels, and also on significant volumes for the last 3-4 trading sessions. And if we look at the stock, the earlier resistance, which was somewhere around the 4,100 level, that has been taken out, and the stock now has a potential to rally towards the 4,600, 4,650 level, because that's the next top which the stock had made in April of 2022. So that was around 4,640. So the stock is definitely on an up move and sustaining over these levels. So the current support zone for the stock would be around 41, 4,200 level. And on the upside, the stock has a target level of 4,600 to 4,650 in the short term.
Alright then, that's about Divi's Lab, but let's talk about Engineers India as well, because this is an earnings candidate, but not a great set of earnings after the kind of run-up that we have seen in a stock like Engineers India, because what we are seeing is that there has been a cut across the board. The revenue is down about 8.5% on a YOY basis. EBITDA also shrunk to 54% on a yearly basis, and margins also seen a contraction of close to 19% in Q4 of FY23 to 9.6% right now, and profit also declined almost 40%. So not a great set of numbers coming in from Engineers India, and hence the cut is what we are seeing on the stock price today.
Alright, coming to you then, Amar, Torrent Power is what you've picked out for us. This one has given us some good gains in the last 6 months, almost more than 56% of gains. Tell us, what is the more? Is there any more upside to this, or what is the the price that you are penciling in for the stock?
So looking at Torrent Power, we what we could say is that the long-term trend definitely remains positive. Short-term and intermediate term, we are seeing some sort of consolidation happening in the stock, and the stock now seems to be capped in the range of the recent highs which the stock had made of 1633, and then again a low of 1300 level. So the stock seems to be capped in that range, so it's more of a range play for the stock, but the long-term trend remaining positive. So I would say one needs to be slightly careful in the stock, because the upside which the stock could rally towards is around 1500, 1550, 1570. That's the level to watch out for, because the trend is positive. Sustaining over the 1500 mark is very important for the stock. Then the stock could rally towards its all-time highs.
All right, then that's about Torrent Power. But Jinai, coming to you for the next counter, you have picked up EIH, another earnings candidate as well. Take us through what was the report card of EIH.
Yes, the company reported a very good set of numbers. The revenue saw an uptick of around 17%, which stood at 741 crores versus 637 crores year-on-year basis. If we talk about net profit, that was the main highlight, as it stood at 248 crores this quarter versus 92 crores on year-on-year basis, which was an improvement of 169%. Moving on to operating performance, the EBITDA was also up around 48%, coming in at 303 crores versus 205 crores on year-on-year basis, and the margins also saw an improvement which came at 41% versus 32.18%. The company has also proposed a final dividend of 1.2 per share. Well, there was an exceptional item in the company, and the company highlighted that it was due to a provision of impairment in its wholly owned subsidiary EIH FISL, which stood at around 10 crores.
Alright, but with that, it's time for us to slip into a short break. Don't go anywhere, we'll be back with some more stocks.